Good morning. Market movers for Friday, August 16th. It's about 8 a.m. Pacific time. Just keeping an eye on the market, up about 20 points or so on the Dow. We opened down a few points, maybe 20 or so on the Dow. After yesterday's 225-point drop, we're reasonably close, within roughly 100 points of the 15,000 mark, roughly trading around 15,100 or so on the Dow. Obviously, a break below 15,000 technically would be a big negative for the market, but obviously we're not right there yet, but it's Friday. Things can happen on Friday, so we're just keeping a close eye on that right now. Also had consumer sentiment. The consumer sentiment index actually for August just came out, down about 5 points. It was 85.1 last month in July, down to 80. Still a good number, but definitely declined. So that could indicate people are getting a little bit nervous about the Fed tapering possibilities and the lack of growth in the economy. We also had a fairly lackluster second quarter earnings season, pretty disappointing overall. Very slight growth, maybe 1-2% overall for the second quarter, which is not all that attractive, especially when you consider how much money the Fed's been pumping into the economy to try to stimulate growth. We're not seeing it, and that consumer sentiment number is probably a direct reflection of that definite problem with the economy just being so sluggish. We also had housing starts. This is a July number, so we're looking back to last month, but we had a 5.9% increase in housing starts. That's a good indication from the new construction side of things in the real estate market, that the home builders are going forward. Mainly that was multifamily, the multifamily construction area of that. Housing starts number was where we saw the most growth, which is not single family obviously, but it is residential, so could bode well for the residential side of things, although the home builders tend to be overly optimistic at times when the rest of the market doesn't really reflect their optimism. We've seen that time and time again in the past, so I wouldn't put a whole lot of weight in that number, but so far anyway, the market is holding up okay. Yesterday's 225-point drop, while it's pretty substantial as far as percentage, maybe 1.5% or so, not really the larger kind of crack that I need to see or the market should have to really establish a downtrend for a correction. We need more like a 300 to 500 point drop on a single day with high volume supporting that drop to really shake the market a bit and let people know that we are entering a correction phase. What we've typically been seeing when the market kind of pulls back by 50 points, 100 points, 150 points a day over several days is that it's not enough to shake confidence, and investors start to see the market as a buying opportunity, as just a dip, a temporary dip, and they go in and buy it and run the market back up most of the time to new highs. And so we may very well see that again. The market could rally back and go above the 1710 number level on the S&P 500. But I think we're getting closer as we get closer to September's meeting for the Fed, the possibility of tapering. We're getting closer to having that real correction. October is usually a bad month for the market, so we may have to wait till October to get a real correction. But if we do wait that long, we could see a substantial crack in October. Maybe not on the order of magnitude of the 1987 crash, but we could see a pretty big drop. And I'd love to see a 20% drop, but it doesn't have to be all in the same day. So we'll see how things go.